Welcome to Explain the Charts. Today, September 16th, 2025, we're diving deep into Amazon stock, ticker Amazon, to provide you with an in-depth analysis of its recent performance and future prospects. We'll be blending the latest news with a thorough examination of its candlestick charts across multiple time frames. Our goal is to identify critical trends, potential reversals, key support and resistance levels, and provide you with an unbiased outlook for trading decisions, both short and long term. Looking at the daily chart, spanning from May 2024 to today, we immediately observe Amazon stock has experienced considerable volatility, a common trait for a Magnificent Seven stock of its caliber. Notice the sharp and significant drops that occurred around July 31st, 2024, and again on July 31st, 2025, following its Q2 earnings reports. These steep pullbacks, characterized by large red candles and substantial trading volume, highlight a recurring investor sensitivity. Specifically, the market reacted strongly to concerns about Amazon Web Services, AWS, growth figures, and slightly conservative future guidance, even when overall earnings often beat headline expectations. Let's narrow our focus on the daily chart to the period between early February and mid-March 2025. Here, we can clearly see Amazon reaching a significant high of $242.52 on February 4th, 2025, a crucial resistance level mentioned in recent news as a target the stock has been chasing to return to. However, this impressive peak was quickly followed by a notable reversal, with the price retreating sharply throughout February and into early March. This correction saw the stock fall from over $240 to around $200, establishing a robust resistance zone near the $240 to $242 range that has proven difficult to overcome since. This period of decline aligns with ongoing analyst scrutiny of AWS' competitive position in the rapidly evolving AI market, especially against strong performances from rivals like Microsoft and Google Cloud. The increased selling volume during this downturn suggests a strong bearish sentiment taking hold as investors evaluated Amazon's long-term AI strategy clarity, or lack thereof, post-earnings. Now, switching to the one-hour chart, let's zoom in on the more immediate price action from mid-August 2025 through today, September 16th. After the severe dip following the Q2 2025 earnings report at the end of July and into early August, Amazon demonstrated a resilient recovery. It climbed steadily from the low $210s, pushing back towards the $230s by the first week of September, showing classic signs of a bounce back from oversold conditions. However, since early September, we've observed the stock consolidating and trading somewhat choppily around the $230 to $232 level. This horizontal movement, despite positive news like the upcoming Prime Big Deal days and continued AWS momentum, indicates that underlying selling pressure or profit-taking is preventing a sustained upward breakout. The recent news of Oracle gaining AI market share, leading to a 3% drop in Amazon, directly contributes to this indecision, underscoring investor concerns about AWS' competitive edge. The current range-bound trading suggests a critical battle between bullish optimism and bearish anxieties for market control. To gain an even clearer picture of the immediate short-term landscape, let's examine the 15-minute chart for the last few trading days, specifically from September 11th to September 15th, 2025. Here, we see the stock attempting to stabilize after the midweek dip from around $231.50 on September 11th. It found critical immediate support near the $228.15 level on September 12th, marked by a clear reversal candle with increased volume, which successfully prevented a further downward spiral. This $228.15 level now serves as a crucial immediate short-term support that traders will be watching closely. The subsequent bounce brought Amazon back to its current price around $231.43, where it is once again encountering resistance near the $231.50 to $232 zone that it previously struggled to break through. Intraday volume during this period has been moderate, indicating a lack of strong conviction from either buyers or sellers to force a decisive move out of this tight range. This very short-term perspective highlights AMZN's current indecision, with bulls and bears in a standoff, waiting for a definitive catalyst. So, understanding these price movements and the broader news, what are the key reasons to be bullish or bearish on Amazon in the short and long term? Bullish arguments are strong, driven by strategic AI investments, including a 15 to 19% stake in Anthropic, promising up to $5 billion in cloud revenues for AWS by 2026. Project Kuiper's satellite internet expansion and record R&D spending, exceeding $75 billion in 2025 on AI and cloud, signal robust future growth. Amazon's advertising division is also growing strong. Analysts are overwhelmingly positive, with 94% buy ratings and average targets from $261 to $272, with a bullish case reaching $350. The upcoming Prime Big Deal Days in October is a major near-term catalyst, testing consumer demand ahead of the holidays. Conversely, bearish concerns include slower AWS growth compared to rivals like Microsoft and Google Cloud. Oracle's recent impressive AI market share gains directly challenge AWS, contributing to AMZN's recent stock fall and investor unease. Technically, the stock struggled to hold above the $236.53 flat base by point highlights significant resistance. Macroeconomic risks, like potential tariffs and elevated Magnificent Seven valuations, could also trigger pullbacks. To recap, several key price levels are crucial for Amazon. Immediate short-term support sits around $228, with stronger support at $210 to $215, and a critical long-term floor near $190 to $200. On the upside, significant resistance is at $236.53, the flat base by point, followed by the February 2025 high of $242.52. For unbiased predictions, Amazon is likely to remain range-bound between $228 and $236 in the short term, with a 60% likelihood, absent new catalysts. A break above $236.53 could test $242.52, 40% likelihood in coming weeks, especially with strong Prime Day sales and positive AWS updates. Conversely, a sustained dip below $228 might signal a retest of $210 to $215 support, 30% likelihood, reinforced by further Oracle gains or broader market weakness. Key things to look for include the performance of Prime Big Deal Days on October 7th to 8th, and any further news on AWS AI strategy and market share. Upcoming Q3 earnings reports will also be critical for clarity on AI investment returns and AWS growth. Finally, closely monitor broader market sentiment and global trade tariff developments, as these have historically driven AMZN's volatility. That concludes our in-depth analysis of Amazon stock today, September 16, 2025. We sincerely hope this comprehensive breakdown helps you in making more informed trading and investing decisions. If you found this video insightful, please give it a thumbs up, subscribe to the Explain the Charts channel, and hit that notification bell so you don't miss our future market insights.